Hello and welcome everyone to another episode of the Highline Podcast. Today we're going to be studying another absolutely booming market, and that is the sleep tech devices market. The sleep tech devices market is growing at 18.2% year on year for the next decade. It is currently a size of 17.9 billion and is predicted to grow to 95 billion in 2032. Sleep has obviously become very topical at the moment with a range of new innovative devices that have allowed us to be able to track our sleep like never before. The plan for today is to look at who the customer is in this market, take a look at the current sleep stack, and then we're going to study some interesting companies looking at the Australian company Koala, 8 Sleep, Whoop, and Quora, and then finish off with some of the bigger American technology giants who have entered the sleep market, and then always finish with some of our ideas. There is another underlying trend in the market, which is the convergence between sleep tech companies and normal enterprise companies. And at first glance, you would assume that all the companies in this category are direct to consumer. For the most part, you would be correct. However, companies are taking sleep health more seriously and providing incentives for their employees to sleep more. So expect to see this as more of a business issue moving forward. And the other thing is, expect to see a lot of these companies that exist in this market start to sell massive packages to enterprises. So for example, you might be an employee at Microsoft and you would receive a free 8 Sleep and a Whoop band. I think we're going to see a lot of this in the future, and it's something that we need to take note of, not just for this market, but understand what other markets might be going along the same path so that we can start that enterprise selling a lot earlier than some of our competitors. So why has sleep become so popular? There are a number of reasons why sleeping as an issue has become so popular, and I think the first reason is due to Matthew Walker. Matthew Walker is a professor of neuroscience and psychology at UC Berkeley. He released a very popular book called Why We Sleep, which went on to become a bestseller. To promote the book, he went on a number of podcasts, including The Tim Ferriss Show, Joe Rogan, The Human Lab, and was the pioneer of educating the general public about the impact of sleep and why sleep is so important to our overall health. The work of Matthew Walker encouraged a lot of other professors to start speaking about the benefits of sleep and how to optimize your sleep on podcasts, and then this grew the mainstream consciousness. And it's a really good lesson for us to learn, actually, is if we start to see some highly credentialed people in the fields that are close to these markets and they release popular books, they start to do the podcast rounds, then we need to be paying attention as to how we can capitalize, because we can assume that there is going to be a lot more consumers that are suddenly going to be aware of this new market as a thing, and we want to be ready to capitalize on that growth. To build on how the sleep market took flight, there has been little innovation in the space until about the 2010s. And what's happened is there's been a convergence of a couple of different factors. The first is the knowledge of how important sleep is, and consumers are taking sleep a lot more seriously. The second is the technological advancement in creating hardware devices that are, one, small enough to be worn by individuals and that had the technology to track sleep metrics. And then we also have the increase in the number of wearable devices. In the US alone, the number of wearable devices has grown from 25 million in 2014 to 67 million in 2022. The convergence of all these different factors has encouraged users to be more curious about tracking their sleep and how to improve it, which has driven a lot of market growth. Let's take a look at who the consumer is in the market. And this is a similar consumer that we have looked at before in the nootropic market. And that customer is an individual who has a higher level of awareness of their sleep, nutrition, fitness, stress, and optimizing their health environment, and who prioritize spending money in these areas. This is almost the exact same customer as the nootropic customer, which shows you again that if you're a super consumer in one area, you are likely a super consumer in 9 other areas. This is absolute gold for you and me, because we need to be thinking about how we can attack one specific super consumer, particularly in the fitness segment, and then sell them a range of products in these fast growing markets. Before we get into the company specific stuff, I just want to go through the sleep stack. And the reason why is some of these areas have had a lot of focus and innovation from the companies. And there are also some areas in this sleep stack which have absolutely no innovation. And those are some of the areas that we need to be thinking about. The first area of the sleep stack is what we call smart beds. Smart beds are temperature controlled mattresses, and an example which we're going to look at in the podcast is 8 Sleep, who has created the first smart bed Then we have wearables, and these are devices which measure your biomarkers either through a band or a ring. Companies like that include Quora and Whoop, which we're going to take a look at. Then we have bedding, which includes sheets, weighted blankets, and pillows. And we also have consumables. Consumables are sleep drugs, melatonin, reishi mushroom. Then we have sleeping apps, which can capture data about your sleep biometrics using the accelerometer on your phone, measuring your breathing. And this category also includes meditation and yoga sleep applications. And then lastly, we have therapeutics, which is sleep apnea devices and respiratory devices. Now let's take a look at some of the other companies operating in this market. And first, we're going to start with the Australian company Koala, which was founded in 2015 by Mitch Taylor and Danny Milham, two serial consumer company founders. They found a gap in the market where companies were making mattresses out of materials that were just not suited for the Australian climate. The mattresses on the market did not deal with the weather well. They're often too hot and really uncomfortable in summer. And they found that the ideal material for a mattress was memory foam, which was comfortable, breathable, moldable, and most importantly, could be vacuum sealed and packed into a small box and delivered to the customer cheaply. What are we seeing here, guys? We are seeing an innovation in the distribution strategy, which we have already seen in vaping. At the time, when they first started in 2015, the growth of the mattress manufacturing industry was only 4.2% per year on average. Not exactly the most attractive market from a growth perspective. So I wonder what they saw in this market. And I have a couple of theories. Was it the opportunity to build a superior product and innovate in distribution? The digital consumer model would allow them to carry less inventory, which meant better unit economics, and maybe that was their angle. Or did they see an underlying trend regarding sleep that would enable further market growth and allow them to become very big very fast? Maybe they just saw the growth of sleep tech very early, which could also be a possibility. So, how did they end up doing? After 79 days of launching, they did $1 million in sales. And by month 12, they had done $12 million in sales. At the moment, I think they're becoming a publicly listed company. They've since expanded to a range of other homeware products, such as couches and chairs. We have a story about Steve Smith, the former Australian cricket captain, who invested $100,000 in the online mattress company in 2015. That $100,000 has made him a millionaire, and his stake is now worth $12.1 million. Not bad from Steve Smith, boy. All right, so let's have a look at 8 Sleep. This is one of my favorite companies that I've ever covered, and we're going to get into a couple of different reasons for why that is. 8 Sleep is the first sleep fitness company. 8 Sleep designs mattresses and sleep covers which detect your temperature, heartbeat, and breathing, and heat or cool the bed accordingly. 8 Sleep was founded in 2014 by Matteo Franceschetti and Massimo Bassi, as well as Alexandra Zattari. CEO Franceschetti was an athlete in his teenage years and grew up playing sports such as tennis, skiing, and motorsports. Before 8 Sleep, he was a lawyer, and he came up with the idea of 8 Sleep by realizing he spent 1/3 of his life sleeping, yet there had been no innovation to sleep better with the mattress. I just want to pause here and just say how brilliant this idea is from a business perspective. Think about the last time there was an innovation in mattresses. It probably went from sleeping on the floor to sleeping on foam, and that's probably about it, right? So such a good example of just a unique idea in a market that has had no innovation for the last 200 years. 8 Sleep has a hardware as a service model where you purchase the pod or mattress outright, and then you subscribe to their software, which provides the tracking and a range of different interfaces, which include recommendations and the temperature control. 8 Sleep is a private company, so they haven't disclosed their official user numbers, but they have said that they have about 10,000 users. So that equates to $1.2 million of ARR, which is 10,000 times $15 per month, and about $25 million in hardware revenue. 8 Sleep has raised a couple of rounds of funding. They're currently on their Series C round, and they've raised $162 million to date. My biggest learning from 8 Sleep is designing a product that is more efficient than any other product on the market. And I got this idea from Kunal Shah, who is an Indian entrepreneur, and he has this idea called the efficiency hypothesis, which goes like this. The efficiency hypothesis is a framework that we can use to evaluate new products by understanding the value of the product in terms of its efficiency. Product efficiency is the most crucial element in changing consumer behavior. I just want to zoom in on that last part of the sentence, which is product efficiency is the most crucial element in changing consumer behavior. The reason why that is important is because when we bring a new product to market, we want the consumer experience to be so dramatic that they can only use our product from now on because it is significantly more efficient than any of the other products on the market. To describe the efficiency score hypothesis, we need to measure the efficiency score of a product on a scale of 1 to 10. In order to meet the criteria for an efficient product, it needs to have a delta of 4. And what I mean by that is if you have product A, which operates in a market and it has an efficiency score of 1, product B, in order to prove the efficiency hypothesis, has to have an efficiency score of 5, and the change between them is 4. And that is how you can gauge whether or not a product is going to significantly change consumer behavior. What occurs when you achieve an efficiency score of greater and or equal to 4 is it creates an irreversible behavior. And an example of this, when a user starts using Uber, it is impossible to go back to ordering a taxi via the telephone. The willingness to keep using the product is very high because it is so much more efficient than the old way of doing things that they cannot go back to it. The other thing which it creates is the UBP, the unique bragworthy proposition. Humans love to brag about new and exciting products that they are using to other humans. This phenomenon becomes important because it is the key driver for word of mouth marketing and is a fundamental part of the company's unique selling point. The other thing that happens is people have a high tolerance towards the product. For example, even if Uber is down for an hour and the ride got cancelled due to some error, people are still going to continue to use Uber. This is contrary to other businesses which haven't achieved an efficiency score of a delta of 4. For example, when you are purchasing clothes online, if it goes wrong one time due to a misfit, people tend to abandon buying clothes online completely and prefer to go back to a brick and mortar store because the efficiency score of it is not significantly better. So I want to explain an example of seeing the efficiency score in action of the 8 sleep. You have a great night's sleep, you have to tell everyone. If you have a bad night's sleep, you have to tell everyone. Massive word of mouth. Users are naturally motivated to share their sleep stories with others. That seems to have been the significant driver in these tech founders wanting to be 8 sleep investors and not just customers. Anthony Pompliano, who is the host of the Pomp podcast and is a very famous investor. I read a story about Anthony Pompliano who used to only sleep about 6 hours a night until he got an 8 sleep, and then using the 8 sleep, he was able to sleep 8 hours a night. Felt so compelled that he had to invest in the company. Another example of an investor called Anthony Gracias, who is the general partner at Valor Capital. He slept on the 8 sleep for one night, had a significant improvement in how he slept. He felt so compelled that he had to get involved. So what we need to be doing is we need to be studying the products in these high growth markets to figure out where we can improve on the efficiency score, because those are where the biggest opportunities lie. All right, now we're going to move on to a company called Whoop. Whoop builds a fitness and health wearable product to monitor recovery, sleep, and training, along with a membership for 24/7 coaching to improve health. Whoop was founded in 2012 by Will Ahmed, who's the CEO, and John Capodopo. The idea for Whoop originated when Ahmed realized how little he knew about optimizing his physiological performance as a student athlete. Around 2010, Ahmed began reading medical papers on the subject. He observed that there wasn't a comprehensive way to track his nutrition, sleep, and recovery all in one location. This was the opportunity that Ahmed saw, which was to create a product that could allow you to track your sleep, your nutrition, and your recovery all in one. And he got together with his co-founders and they ended up creating that physical product, which started off as a band. Now, it took them a while to bring the product to market and they launched in 2015. Early on, Whoop was able to attract some interest from elite athletes, signing athletes like LeBron James in 2017. In 2017, the MLB approved the use of Whoop by players during games. Also that year, Whoop announced a deal with the National Football League Players Association, the NFLPA, making Whoop the official licensed recovery wearable of the NFLPA. In 2021, the PGA World Tour announced a deal that saw Whoop become the official fitness wearable of the PGA Tour. Later that year, CrossFit also signed a multi-year deal that saw Whoop become the official wearable device of CrossFit. And in 2022, Whoop entered brick and mortar retailing with a partnership with Best Buy. So since then, Whoop has raised a number of different funding rounds. They're currently on their Series F funding and have raised a total of $408 million to date. There is a lot that we can learn from the Whoop story. And the first is Whoop started off targeting athletes as their main customers. Now, at the time, this would have been counterintuitive because the number of elite athletes just globally is extremely small, right? It's a very small and minority market. But this ultimately became an extremely valuable customer for Whoop as they were able to deliver reliable and accurate data which could be used to improve the performance of the world's most elite athletes, which gave the product a lot of validation. The other hidden benefit of targeting athletes is these athletes have a significant following. They are watched on TV by millions of people. They have millions of social media followers. So Whoop essentially gets free distribution from this tactic without having to actually advertise. So how they utilize that to their advantage is they created a strong brand around athletes and high performance. And that has allowed them to be the number one destination for data and recovery. Now we're going to take a look at Quora, which has a different strategy to Whoop. Quora is a wearable ring which monitors multiple physiological parameters, including sleep stages, heart rate, and physical activity. It has a battery life of 70 days and is designed to be worn 24/7. It's won a lot of design awards, including the 2018 Red Dot Award for product design. Quora was founded in 2013 in Finland by 3 technology founders. I'm not going to pronounce their names as they are a bit of a tongue twister. The company officially came together in 2015, and then they did 3 years of product development. In 2017, their first rings were delivered to customers, including Harpreet Singh Ray, who was a portfolio manager at a hedge fund based out of New York. In 2017, Ray invested in the business, joined its board of directors, and became president. He moved the company from New York to San Francisco and was appointed its CEO in 2018. There's a good lesson there for us is be careful who you let into your company because sometimes it can bite you in the ass. To accompany the Quora ring, we have the Quora app, which translates the raw data into a sleep score, an activity score, and a readiness score. Quora also has an API, which allows third-party developers to build using the Quora raw data, which allows customers to have access to a range of different third-party services and providers using their API. In the early days, they originally raised money on Kickstarter and struggled to find momentum. Although they had received a lot of reviews, they had a real singular focus only on sleep tracking, which kept them very niche until the pandemic. And when the pandemic spread, what happened was a number of individuals realized that the Quora ring actually gave them indications when they were about to get COVID. So organizations like the NBA and Las Vegas casinos ordered thousands of these Quora rings to give to employees to keep their businesses running. And the idea was that if the staff could use their Quora ring to see when they're about to get COVID so that they wouldn't come into work and spread the virus. Now that marked an inflection point for Quora breaking into the mainstream consciousness. Quora reported selling 500,000 rings in 2021, and then in 2022 sold 1 million rings. COVID grew the company substantially, and they started to sign a lot of high-profile organizations such as Real Madrid, Red Bull, the UFC. In 2022, the company created a $950 Gucci and Oura Ring collaboration and is sold at all Gucci locations. There is a clear difference in strategies here between Quora and Whoop. Whoop started off targeting elite athletes, which is at the high tier of their market, where Quora started off without a specific target market and struggled to find that initial traction. And that's where we can see the core difference. And one learning for us is I think going narrower earlier is more effective than the opposite strategy, as it puts a lot more pressure on you to actually find out who your customer is. The other learning that we can take from Quora and Whoop is the narrowness of pattern matching products. Quora and Whoop track patterns. They track your sleep and they track how certain activities affect your body. Once an individual becomes aware of these patterns, the value of these products begins to diminish. And I want to give you an example of this occurring, and I read this in Liberty RPF's newsletter, and this is not a diss on Quora, this is simply explaining my point. I'm finding myself checking my sleep metrics for my Quora ring a lot less often lately. After my ring dies, I probably won't replace it. I'm not saying it's useless or that you shouldn't get one if you think your sleep could help. I've been wearing a Quora ring since 2019 and it has made my life a lot better by helping me optimize my sleep. It's created a highly visible feedback loop between my actions and their impact on my sleep quality. What gets measured gets managed. It's easier for me to be convinced by hard numbers and graphs and long-term trends rather than by the vibes on how I'm feeling. It's helped me change a bunch of behaviors. I drink a lot less alcohol, even though I never drank much in the first place, because it really kills my sleep quality. When you feel like dog crap the next day, part of it's the alcohol directly, part of it may be dehydration, but a big part of it is also the bad sleep. But I've been tracking things for so long that now I have a well calibrated mental tracker that gives me most of what my Quora does. So I've reached diminishing returns. It's similar to how I've been tracking what I eat in an app for years now. Now I can just look at a plate of food and have a much better idea of the macros and calories than I did before I started tracking things. I was getting huge benefits in the first few years, medium benefits after that, and much smaller benefits today, which is fine. Not every experiment has to last forever. On to the next one. The learning for us here is we need to think about what the diminishing returns are in our product, and we need to understand where those diminishing returns begin to occur after a certain time period and whether or not we can change that. It's hard to win new customers. Once we've got a new customer, we want the product to consistently deliver value for them so that they don't churn, because otherwise we're going to have this machine where we spend a lot of money trying to get a new customer and they use the product for a couple of months or maybe a year and then they churn because they get diminishing returns from our product. That is a very inefficient business and something that we should try to avoid at all costs. Now let's take a look at some of the other companies that operate in the sleep tech space. So first we have Xiaomi. Xiaomi is a electronics company founded out of Asia. They entered the sleep fitness wearable market in 2014 with a band called My Band. It sells for less than $60 and has reportedly sold over 120 million bands in the US. It tracks a range of different health metrics and can be used for sleep tracking as well. Then we have Garmin, which was founded in 1989. It's a multinational technology company best known for its GPS product offerings. They have a range of different wearable devices which can also measure sleep and some other key metrics. We have Fitbit. Fitbit was founded in 2017, became very synonymous within the wearable fitness technology. Fitbit ended up getting acquired by Google and has been, heavily integrated into Google's existing product offerings. Apple has their frontier product, which is the Apple Watch, which is sold 67 million, and that has a range of different health tracking capabilities and is a major competitor to both Whoop and Quora. Amazon has also entered the space with a product called the Halo Band, which looks nearly identical to the Whoop, and it was launched in 2023. It costs $69, and it also has a Halo membership, which is $3.99 per month. It's clear within the wearable space that we have the American technology giants have all entered, which makes things very difficult because we have to compete with their superior logistics, superior distribution, and hundreds of millions of dollars of free cash flow. Unless we identify a very niche opportunity that they have overlooked, I would strongly suggest otherwise entering this market. Now, let's finish off the conversation by sharing some of our learnings and ideas. So, the first learning is don't let a good crisis go to waste. It's clear that both Whoop and Quora benefited from COVID, and the learning here is we need to stay in the game long enough to get lucky. We don't want to try and go too big too soon. We just want to stay in the game, work on what we can work on, don't spend too much money, because eventually we're going to get lucky in the market. Something is going to occur, and I think this is exactly what happened to Quora and Whoop, and sometimes this might take a long time, so we just need to be patient. That's the first learning. The second learning is the sleep tech devices market is extremely hot. And the information for this podcast was quite easy to find. There are a range of different write-ups on Whoop, 8 Sleep, Quora, which means there's a lot of eyes on this market from investors and individuals. That makes things hard for us because whenever there is hype, it means there's going to be lots of competition, and we want to avoid the competition. What we are looking for is the weird, the hard stuff, the hard things to find information on. That's what we are looking for, and those are the most interesting places that we need to be. So we need to be studying the different parts of the stack to find out where there is areas that have been overlooked and taking our learnings from the efficiency hypothesis to start to begin to brainstorm how we could create products that are significantly more efficient than every other product in the market in that space. And then find out if there is an opportunity in that market to segment hard for a very niche type of customer to get us that initial early validation and momentum. All right, guys, that is all for the sleep tech market. If you enjoyed this podcast, please could you just share it with one person? If there is a market that you would like me to check out, I would love to hear from you. And if you'd like to receive an email highlighting my key ideas and some of the other stuff that I've been working on, please sign up to my newsletter in the show notes. Chat soon.